In this video, we will explore various types of financial services and highlight their key features and benefits. Whether you're looking to manage your personal finances or seeking professional assistance for your business, understanding these services will empower you to make informed decisions. Some of these financial services are banking services, investment management, wealth management, financial planning, insurance services, retirement planning, tax planning and preparation, mortgage services, credit and debt management, estate planning, real estate services, foreign exchange services, corporate finance, business valuation, financial advisory, private equity, venture capital, financial education, merchant services, and risk management services. Let's discuss about them in details. Number 1. Banking services. Banking services encompass a broad range of financial activities, including savings accounts, checking accounts, loans, and credit cards. Banks provide a secure environment to safeguard and manage your money while offering convenient tools for everyday transactions. A bank's job is to provide customers with financial services that help people better manage their lives. As technology advances and competition increases, banks are offering different types of services to stay current and attract customers. Some of the banking services include savings accounts, checking accounts, loans, credit cards, online banking, and ATM services. A bank is a financial institution licensed to receive deposits and make loans. There are several types of banks, including retail, commercial, and investment banks. In most countries, banks are regulated by the national government or central bank. Number 2. Investment management services. Investment management services assist individuals and businesses in optimizing their investment portfolios. These services are provided by professionals who analyze market trends and devise strategies to maximize returns while managing risks. Investment management services include managing portfolios of various investments, such as stocks, bonds, mutual funds, and other securities, to generate returns over the long term. Investment managers provide various services, including asset allocation, financial statement analysis, stock selection, investment monitoring, and investment strategy and monitoring. There are 3 types of investment management: traditional investment advisors, online financial advisors, and robo-advisors. So, what are the objectives of investment management? Investment managers work closely with clients to understand their financial goals, risk tolerance, and investment preferences. They assess factors such as time horizon, income requirements, and liquidity needs to develop tailored investment strategies. Investment managers analyze financial statements to evaluate market trends and identify potential investment opportunities. Number 3. Wealth management services. Wealth management services cater to high-net-worth individuals and families, offering personalized strategies for asset allocation, estate planning, tax optimization, and more. These services aim to preserve and grow wealth over the long term. Wealth management is an investment advisory service that combines other financial services to address the needs of affluent clients. A wealth management advisor is a high-level professional who manages an affluent client's wealth holistically, typically for one set fee. This service is usually appropriate for wealthy individuals with a broad array of diverse needs. So, let's understand the responsibilities of a wealth manager. Wealth managers work closely with clients to create personalized financial plans. They consider a range of investment options, including stocks, bonds, mutual funds, real estate, and alternative investments. Wealth managers support business owners in planning for the successful transition of their businesses. Number 4. Financial planning services. Financial planning services help individuals and businesses create comprehensive strategies to achieve their financial goals. They cover areas such as budgeting, retirement planning, education funding, insurance, and risk management. Financial planning services refer to professional services that help individuals and businesses manage their finances and plan for their financial future. They are provided by qualified and experienced financial planners who have expertise in investment management, retirement planning, tax planning, estate planning, and risk management, among other areas. The primary aim of financial planning is to help clients achieve their financial goals by creating a comprehensive financial plan that considers their current financial situation, future financial goals, and potential risks. Types of financial planning services include retirement planning services, investment planning services, tax planning services, estate planning services, risk management services, etc. Number 5. Insurance services. Insurance services protect individuals and businesses from financial losses due to unexpected events. These include life insurance, health insurance, property insurance, and various forms of liability coverage. Insurance is a contract, policy, in which an insurer indemnifies another against losses from specific contingencies or perils. There are many types of insurance policies. Life, health, homeowners, and auto are among the most common forms of insurance. The core components that make up most insurance policies are the premium, deductible, and policy limits. Types of insurance coverage include health insurance, auto insurance, home insurance, life insurance, travel insurance, business insurance, and fire insurance, etc. Benefits of insurance services include financial safety for family. They provide cover against life's uncertainties and protect you against losses arising from different unexpected events in life. Safety of financial status. Certain events like medical emergencies can have a significant impact on your cash flow management. Insurance ensures you don't have to pay out of pocket for such situations. Wealth creation goals. Insurance policies like ULIPs give you investment opportunities and help you fulfill your essential financial goals. Wealth preservation. Life insurance policies like endowment and money-back plans are some of the safest long-term investments possible. These plans help you preserve your wealth from inflation and taxes for long periods. And wealth distribution. Few investment plans offer the kind of safety offered by life insurance pension plans. After retiring at the age of 60, you can live up to 100. Only life insurance pension plans can guarantee a regular income for that period. Number 6. Retirement planning services. Retirement planning services assist individuals in preparing for a secure and comfortable retirement. They analyze income sources, project future expenses, and recommend investment options to build a retirement nest egg. It is never too early or too late to start retirement planning. Retirement planning refers to financial strategies of saving, investing, and ultimately distributing money meant to sustain oneself during retirement. Many popular investment vehicles, such as individual retirement accounts and 401(k)s, allow retirement savers to grow their money with certain tax advantages. Retirement planning takes into account not only assets and income but also future expenses, liabilities, and life expectancy. There are 4 steps to retirement planning. Come up with a plan. Decide how much you'll set aside each month. Choose the right accounts for you. And check on your investments from time to time and make periodic adjustments. Number 7. Tax planning and preparation services. Tax planning and preparation services ensure compliance with tax regulations while optimizing tax efficiency. Professionals in this field offer advice on deductions, credits, and strategies to minimize tax liabilities. So, what are included in tax preparation services? Tax preparation services involve the actual process of filing tax returns accurately and on time. Tax professionals assist in organizing financial documents, completing tax forms, and ensuring compliance with tax laws. Tax planning for businesses focuses on identifying deductible expenses and taking advantage of tax breaks. Tax planning is the analysis of a financial situation or plan to ensure that all elements work together to allow you to pay the lowest taxes possible. Considerations of tax planning include the timing of income, size, the timing of purchases, and planning for expenditures. Tax planning strategies can include saving for retirement in an IRA or engaging in tax gain-loss harvesting. Number 8. Mortgage services. Mortgage services facilitate the process of obtaining a home loan. They assist borrowers in finding suitable mortgage options, assessing eligibility, and managing the application process. A mortgage lender is a bank or financial company that lends money to borrowers to purchase a home. A mortgage servicer handles the payment processing and is the company that sends the monthly statements to the borrower. If your mortgage is sold, you'll have a new service provider, which should notify you of their address to send payments within 30 days. A mortgage lender or bank can be both the loan provider and the servicer of the mortgage. Both a lender and loan servicer have specific policies and procedures that they're required to follow, and both are regulated by the federal government. Number 9. Credit and debt management services. Credit and debt management services aid individuals and businesses in effectively managing their debts. They offer guidance on debt consolidation, budgeting, credit repair, and negotiating with creditors. Credit management is crucial for a business's financial stability, preserving cash flow, and reducing bad debts. The credit management process involves several steps, such as credit application, credit analysis, credit monitoring, debt collection, legal action, and reporting. Here are 6 ways that businesses can improve their credit management process. Establish clear credit policies. Conduct thorough credit checks. Monitor credit usage and payment history. Use technology to streamline processes. Train staff on best practices for credit management. And regularly review your credit management processes. Through these efforts, businesses can reduce their exposure to credit risk and improve their overall financial position. Number 10. Estate planning services. Estate planning services help individuals prepare for the distribution of their assets after death. These services include drafting wills, establishing trusts, and minimizing estate taxes. Estate planning and preparation includes determining individuals' wishes, creating individuals' will, creating legal documents, minimizing estate taxes. Estate planning involves determining how an individual's assets will be preserved, managed, and distributed after death, or in the event they become incapacitated. Estate planning tasks include making a will, setting up trusts, and/or making charitable donations to limit estate taxes, naming an executor and beneficiaries, and setting up funeral arrangements. A will is a legal document that provides instructions on how an individual's property and custody of minor children, if any, should be handled after death. Various strategies can be used to limit taxes on an estate, from creating trusts to making charitable donations. Estate planning can and should be used by anyone, not just the ultra-wealthy. Number 11. Real estate services. Real estate services cover various aspects of property transactions, such as buying, selling, renting, and property management. These services are provided by real estate agents, brokers, property managers, and other professionals in the industry. Various service types include residential real estate, commercial real estate, property management and valuation, real estate financing and investing, legal services, etc. Real estate is considered real property that includes land and anything permanently attached to it or built on it, whether natural or man-made. There are 5 main categories of real estate, which include residential, commercial, industrial, raw land, and special use. Investing in real estate includes purchasing a home, rental property, or land. Indirect investment in real estate can be made via REITs or through pooled real estate investment. Real estate is commonly purchased with cash or financed with a mortgage through a private or commercial lender. Real estate development services, or property development services, includes activities that range from renovating existing buildings to the purchase of raw land and the sale of developed land or parcels to others. Number 12. Foreign exchange services. Foreign exchange services facilitate currency conversion for individuals and businesses engaged in international transactions. These services offer competitive exchange rates and timely execution of transactions. Foreign exchange, also known as Forex, is the conversion of one country's currency into another. The value of any particular currency is determined by market forces related to trade, investment, tourism, and geopolitical risk. Foreign exchange is handled globally between banks, and all transactions fall under the auspice of the Bank for International Settlements, BIS. Inflation can have a major effect on the value of a country's currency and its foreign exchange rates with other currencies. While it is just one factor among many, inflation is more likely to have a significant negative effect on a currency's value and foreign exchange rate. A low rate of inflation does not guarantee a favorable exchange rate, but an extremely high inflation rate is very likely to have a negative impact. Number 13. Corporate finance services. Corporate finance services cater to businesses' financial needs, including capital raising, mergers and acquisitions, financial restructuring, and strategic financial planning. Professionals in this field help businesses optimize their financial structures and operations. Corporate finance is concerned with how businesses fund their operations to maximize profits and minimize costs. It deals with the day-to-day demands on business cash flows and long-term financing goals, like issuing bonds. Corporate finance also involves monitoring cash flows, accounting, preparing financial statements, and taxation. Determining whether or not to issue a dividend is another corporate finance activity. Corporate finance jobs can pay attractive salaries. One key aspect of corporate finance is mergers and acquisitions. Mergers and acquisitions involve the consolidation or combination of companies to achieve strategic objectives. Corporate finance professionals analyze the financial implications, perform due diligence, and facilitate the financial aspects of mergers and acquisitions transactions. Number 14. Business valuation services. Business valuation services determine the worth of a business entity. These services are utilized for mergers and acquisitions, shareholder transactions, financial reporting, and legal purposes. There are several valuation methods used to assess the worth of a business, including income approach. This method estimates the value based on the expected future cash flows generated by the business. Market approach. This method compares the business to similar companies in the market and considers recent transaction data. Asset approach. This method focuses on the value of the company's tangible and intangible assets, such as property, equipment, patents, and trademarks. Business valuation determines the economic value of a business or business unit. Business valuation can be used to determine the fair value of a business for a variety of reasons, including sale value, establishing partner ownership, taxation, and even divorce proceedings. Several methods of valuing a business exist, such as looking at its market cap, earnings multipliers, or book value, among others. Number 15. Financial advisory services. Financial advisory services provide expert advice on various financial matters, such as investment strategies, risk management, and financial decision-making. Advisors help individuals and businesses make informed choices aligned with their goals. A financial advisor is a professional who provides expertise for clients' decisions around money matters, personal finances, and investments. Financial advisors may work as independent agents, or they may be employed by a larger financial firm. Registered advisors must pass one or more exams and be properly licensed in order to carry out business with clients. Unlike stockbrokers who simply execute orders in the market, financial advisors provide guidance and make informed decisions on behalf of their clients. Financial advisors' pay can be based on a fee, commission, profit percentage structure, or a combination thereof. Number 16. Private equity services. Private equity services involve investing in privately held companies with growth potential. Private equity firms provide capital, expertise, and strategic guidance to help businesses expand and enhance their value. Private equity refers to capital investments made in companies that are not publicly traded. Most private equity firms are open to accredited investors or high-net-worth individuals, and successful private equity managers can earn over $1 million a year. Private equity firms buy companies and overhaul them to earn a profit when the business is sold again. Capital for the acquisitions comes from outside investors in the private equity funds the firms establish and manage, usually supplemented by debt. The private equity industry has grown rapidly. It tends to be most popular when stock prices are high and interest rates low. An acquisition by private equity can make a company more competitive or saddle it with unsustainable debt, depending on the private equity firm's skills and objectives. Number 17. Venture capital services. Venture capital services focus on funding startups and early-stage companies with high growth potential. Venture capitalists provide capital, mentorship, and industry connections to help these companies scale and succeed. Venture capital, VC, is a form of private equity and a type of financing for startup companies and small businesses with long-term growth potential. Venture capitalists provide backing through financing, technological expertise, or managerial experience. VC firms raise money from limited partners, LPs, to invest in promising startups or even larger venture funds. A venture capitalist, VC, is an investor who provides young companies with capital in exchange for equity. Startups often turn to VCs for funding to scale and commercialize their products. Due to the uncertainties of investing in unproven companies, venture capitalists tend to experience high rates of failure. However, the rewards are substantial for those investments that do pan out. Some of the most well-known venture capitalists are Jim Breyer, an early investor in Facebook, and Peter Fenton, an investor in X, formerly Twitter. Number 18. Financial education services. Financial education services aim to enhance individuals' financial literacy and knowledge. These services offer courses, workshops, and resources to help individuals make informed financial decisions and improve their money management skills. Financial education is an ongoing process. It requires continuous learning and practice. Businesses or individuals can make informed decisions by developing strong financial literacy skills. The term financial literacy refers to a variety of important financial skills and concepts. Financially literate people are generally less vulnerable to financial fraud. A strong foundation of financial literacy can help support various life goals, such as saving for education or retirement, using debt responsibly, and running a business. Key aspects of financial literacy include knowing how to create a budget, plan for retirement, manage debt, and track personal spending. Financial literacy can be obtained through reading books, listening to podcasts, subscribing to financial content, or talking to a financial professional. Financial literacy is the ability to understand and make use of a variety of financial skills. Those with higher levels of financial literacy are more likely to spend less income, create an emergency fund, and open a retirement account than those with lower levels. Some of the basics of financial literacy and its practical application in everyday life include banking, budgeting, handling debt and credit, and investing. Number 19. Merchant services. Merchant services enable businesses to accept electronic payments from customers. These services include credit card processing, point-of-sale systems, and secure payment gateways, facilitating seamless transactions. Merchant services companies provide businesses and individuals with the tools and requirements to accept credit cards, debit cards, and other forms of electronic payment for transactions to take place. The products that merchant service providers offer to businesses in order for them to actually be able to accept and process payments in a way that works for them and their customers. A merchant services provider grants you the technology and information your business needs to optimize operations. You can learn a lot about your business from the payment data provided to you by your merchant services provider. A merchant account is a bank account specifically established for business purposes where companies can make and accept payments. Merchant accounts allow, For instance, a business to accept credit cards or other forms of electronic payment. Merchant account services often come with added fees, but also an array of services. And finally, number 20, risk management services. Risk management services help individuals and businesses identify and mitigate potential risks. These services assess various types of risks, such as market risk, operational risk, and compliance risk, and develop strategies to minimize their impact. Risk management encompasses the identification, analysis, and response to risk factors that form part of the life of a business. Effective risk management means attempting to control, as much as possible, future outcomes by acting proactively rather than reactively. Therefore, effective risk management offers the potential to reduce both the possibility of a risk occurring and its potential impact. The steps in risk analysis process include: identify existing risks, assess the risks, develop an appropriate response, and develop preventive mechanisms for identified risks. So, we have explored various types of financial services and highlighted their key features and benefits. If this lecture was helpful, give it a thumbs up and subscribe to the channel. Thank you.